First, what is a stock? A stock represents a share in the ownership of a company. When you buy a stock, you're buying a small piece of that company. Companies issue stocks to raise money. When you own stock, you're a shareholder, meaning you own part of the company's assets and earnings. The stock market is where these stocks are bought and sold. The two major U.S. stock exchanges are the New York Stock Exchange and the National Association of Securities Dealers, Automated Quotations. Stock prices are determined by supply and demand. If more people want to buy a stock, the price goes up. If more want to sell, the price goes down. To buy and sell stocks, most people use online brokerage accounts. After setting up an account, you can search for stocks by their ticker symbols. Place a buy order to purchase shares or a sell order to sell shares. There are different types of orders: market orders and limit orders. A market order buys or sells the stock at the current price. A limit order sets a specific price. Stock charts show price movements over time. Charts have prices on the vertical axis and time on the horizontal. Candlestick charts show opening, closing, high, and low prices. Finally, diversification means spreading your investments to reduce risk. Instead of investing all your money in one stock, diversify across various stocks and assets. This balances your risk, so if one investment performs poorly, others might perform well. That's a quick intro to the stock market. If you found this helpful, subscribe and hit the bell for more finance tips. Got questions? Drop them in the comments. Thanks for watching and happy investing!